Good afternoon. My name is Vacinek, and I'm actually Director of Investments here at Northstar. We're today going to talk a little bit about a quarter update and kind of looking forward into the markets. But given what's transpired this last week with regards to tariffs, we're going to kind of pivot a little bit over to a brief conversation about tariffs. So just kind of a little reiteration of what just happened in the last week. The current administration in the White House has actually imposed tariffs, which everybody was expecting. What caught the markets off guard is the degree to which they were bigger and broader than markets had originally expected. That is what's causing a lot of the volatility that we're currently seeing in the market for the last couple of days. First of all, let's just kind of talk about what exactly is a tariff. A tariff is a tax that is added on goods and services that are coming into the United States. This is actually a one-time tax. It is actually usually paid for by consumers and or corporations. It is usually inflationary in nature, and it also usually causes some sort of a slowdown in the economic environment here in the United States. That is why the volatility right now we're seeing play through the market, as they are very unsure of what does this mean on a long-term basis. The key to this whole thing is how long will it last? There's many different schools of thought on tariffs and how particularly this administration is implementing them. And one of the first economic views is that this is going to be a short-term pain for long-term gain for the United States economy. A second school of thought is that this will have adverse effects on the U.S. economy on a long-term basis just because of the nature of what is a tariff. The third school of thought is that these tariffs are actually a negotiating tool to have different countries come back and renegotiate trade contracts and bring more business back to the United States. So many different ways these tariffs may be interpreted in the market right now, but as the markets do not like uncertainty, and we don't know what this means for corporate bottom lines, we don't mean what this means from a long-term perspective for the United States, that is why the market is trying to digest what exactly is currently happening. So what is the end game now is, what does this mean for corporations and what does this mean for you as a consumer? This is going to be the big play of how everything's going to be played out in the market landscape right now is as we see earnings unfold from corporations. Many corporations will be bringing manufactured goods in from overseas and selling them here in the United States that will now have this additional tariff on it. And the big question is, how much is the company going to pass on to the consumer? Will the consumer change their spending? So there's a lot of uncertainty of what does this really mean on that long-term basis. From your perspective as a consumer, and more importantly as an investor here at Northstar, what we encourage you to do is we encourage you to stay the course. This is normal for markets to have volatility and have cycles like this. Some of the things that we encourage to minimize this volatility is going to be just being diversified. So a diversified portfolio is one that has many different asset classes, both in the U.S., whether they're large cap or small cap, and internationally. Right now, we are seeing some asset classes that are actually having positive performance. So not everything is actually going down, hence the value of having that diversification in your portfolio. The other thing we encourage at Northstar is to have a segmentation thought process on your money. And that would mean that longer pools of money right now, we can handle these types of volatilities. That's normal for the market to fluctuate like we're seeing right now. And in 10 years, 20 years, these are just going to be blips on a radar screen. And that's where, don't panic about them right now. Stay the course. Know that your financial advisor has probably done various things from the financial planning process in identifying these segmentation of your money and putting you in different pools and different buckets for your needs long term. So to kind of further reiterate, if you actually do have any concerns or questions currently what you're seeing in the marketplace, please feel free to reach out to your advisor. That's what they're here for. They're here to help you understand how your portfolio is structured. We also want to make sure that we understand any concerns you have in terms of risk, in terms of staying course, in terms of needs and goals and how they're being accounted for.